the Dow is down almost 100 points, huh? China, is it the China thing?
Yeah, there's two things going on in that China story. There's one about the slowdown next year, about their economy cooling. The other thing was that they raised fuel prices. They're not controlled by the market over there. They set the prices over there. So that's a double whammy basically. It's slowing growth and inflation, and those are two things that the market hates. So we got.
So this what came out was BHP built and said that they see iron ore demand slowing in China, and the story about gas. This really put a halt on the stock rally, right? I mean, it hit overnight.
The gas price story was out yesterday, so it does sound as if the market's fishing for something particular here, if that's the case.
It definitely is, because especially when that comes in, the worry about inflation, when it comes in with the 10-year yield breaking out to new, above the 200-day average, there's a lot of technical stuff going on there. It kind of, you realize what that means, is that the inflation expectations aren't going to remain stable and subdued like the Fed keeps saying. So that's what's worrying Wall
listen,
Street.
You're a technical analyst kind of guy. You know all these things. I mean, I want to ask you about this. How much of this sell-off that we're seeing today is really technical? I mean, the stocks have been on fire. Everything's been rising. They're all at multi-year highs. How much of this pullback is just sort of technical?
I think that's what it is. I mean, especially since the last 2 weeks, since we had the last big 200-point down day in the Dow, it hasn't been a very strong rally. It's been a very steady. It's been sharp, but it's been very steady, and we've just kind of broken that uptrend in the S&P 500, and now we're just seeing a technical sell-off.
But you mentioned the 10-year Treasury yield in there as a factor in this technical play, and that, of course, is more than a technical concern. It's a fundamental concern because it's the gauge of how what your risk-free alternative is, and of course there's always this trade-off. And so if we're seeing Treasury yields start to rise, all of a sudden stocks don't quite look as cheap as they did, and ultimately you get this trend. But where exactly is the level that, from a technical standpoint, that a 10-year yield starts to cause some concern in this context?
It was actually the 200-day moving average a few days ago. That didn't really hit home to Wall Street yet because they didn't make the connection. A lot of strategists are saying, well, if the bonds go down, then the money will go into stocks. But it depends on why yields are going up. If bonds are going down because of inflation, then that's not good for stocks.
Now that we've had this big run up, the S&P's up 30% from the October highs, October lows. Are people going to start trying to call a top here? Are people going to say, well, it was the Apple thing, or it was the 3 indexes getting over the big number? I mean, are people going to start trying to top tick this market?
If they do, then it might just be a little bit of a pause. That's been the problem, is that it's a whole way up we've been trying to pick the top, and it just hasn't been happening. It's when they start saying, oh, I can't wait for this dip to start buying again. That's when you start to see the market really sell off. When you start, when the dips actually happen, then that could actually be a problem.
So for now, you worried, concerned, bothered?
Not quite yet. We got to see we need to see a string of losses. A big down day, a little couple up days, another big down day, and you start to see that the buyers aren't there that you thought they were.